According to a massive hedge fund manager, the world could face the worst financial crisis since World War II as hyperinflation looms, and largely blames the Fed for this. Not just Fed Powell, but Federal Reserves across the world. Why am I pointing this out to you guys? Because I think in regards to AMC, most people are in alignment that when the world goes to shit, when equity markets go to shit, bond markets, which have basically happened already, but there could be further to go, it really puts a big burden on hedge funds with short positions on stocks when those stocks start to rally. For an example, at this moment, if AMC were to go up, call it 20% in a day because there's good news or possibly good earnings right around the corner, which we will talk about in this video, it puts a lot of pressure on hedge funds when their overall collateral has went down with their long positions, because in this market environment, everyone's jumpy. If a stock like AMC starts to rally and hedge funds say have lost 30% in their portfolios due to their long positions going down, well, that puts a lot of pressure on those hedge funds to post more collateral or to cover on those short position. So long story short, there's the background of all of that. Now, we are potentially setting up for a very strong November as well, with the actual films being released in the box office, and we'll talk about that. The big one is going to be Black Panther Wakanda Forever, and this is expected to be a very big film as well. We'll talk about that in just 1 second. That will come out very shortly. Earnings will be next week as well, and AMC is supposed to post a narrowing loss. So if we do surprise with an actual profit, that could be an event that could be very bullish for AMC. We'll talk about the actual probability of doing that here in this video as well, and we're just going to talk about the broad market. What the hell is going on here today? What do I expect over the next coming weeks, guys? So let's get straight into it. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Thank you guys for tuning in. And now, without any further ado, let's get into it, guys. So first things first, 7 movies that can save AMC stock in November. And it does say the key points. October was a dud at the box office, but a lot of potential winners are hitting the silver screen in November. The Black Panther sequel will be the top draw this week and will likely be the second biggest movie of 2022. Several other movies will find their audiences in November. Now, I think it's clear that while a lot of things are not going to do well, right? Consumer discretionary items, things like computers, things like phones. A lot of people went out and bought those things. But I think for the foreseeable future, there's going to be high demand to go out and do things, to go out and travel, to go out to movie theaters. I don't think that trend is going away. But keep in mind, there's gotta be a reason to go to the theaters. People are not just going out to see stupid movies. Let's just call it that. I don't know. I haven't watched every movie out there. But I imagine there's not that many blockbusters in the theaters right now. For a fact, I know there is not. So a lot of people are not running out to go see movies that they don't want to see, even though there's an urge to go out and do things like that. Now, with that being said, AMC will report earnings on November 8th. And it says the meme stock, darling, is expected to deliver a narrowing loss despite a dearth of new movie theater titles in part of the quarter. So there wasn't a lot of movies that actually went to the theater in this last quarter. There was nothing really to get too excited about necessarily, but I want to focus on next quarter because after all, that's what people really care about. And we just talked about the Wakanda Forever, the Black Panther movie that will be coming out. That will be November 11th. That will be very, very key. And there's some other movies as well that will be coming out, right? And they'll also be important, but I really want to focus on Avatar 2, because Avatar 2 comes out December 16th, 2022. And a fun fact for everyone that does not know this, Avatar, the original, is still the top grossing movie of all time, sitting at almost $3 billion. And this movie came out in 2009. So I've heard a lot of people talking about going to see Avatar 2. I know for a fact people are going to see it again in the theaters. A lot of people are going to go. There's no question. This was a highly loved movie, and people are very excited about the second one. So in regards to that, even just watching Cineworld go bankrupt, there's not a lot of places to go actually see a movie. AMC is gaining more market share in that regard as well. As long as they can actually control the cost at their theaters and manage that aspect of the business, I think they will surprise with a pretty big profit coming for Q1 2023. And it might actually be technically Q4 2022, but it will be reported during, the first 3 months of 2023. So that's what I'm most excited about as of right now. Obviously, AMC could outperform during the last 3 months and show us some really good results for this quarter, and that could be very, very bullish. And I think right now, as long as you can just give markets what they expect, that's very good. If you can beat expectations, your stock's going up at least 20%. In regards to AMC, with a 20% short interest, and obviously, as we know, there's a big retail community backing it. There's a lot of options always being traded on AMC. It could set us up for something very, very big. But I'm really going to hold my hat on the next quarter earnings. I think that's going to be much, much better as far as actual profits here, because I personally think the second AMC post an actual profit, they booked money in the bank, baby, that's when AMC is probably going to start outperforming in a very, very big way. And it would very much surprise me if you didn't see a short squeeze based off of that alone. Now, nonetheless, what is this hedge fund manager saying about the global economy? Well, it says right here, hyperinflation could tip the global economy into the worst financial crisis since World War II, Elliott Management says. The fund said the end of cheap borrowing will spur financial extremes in a letter viewed by the Financial Times. Quote, investors should not assume they've seen everything, the letter said. And it said, the letter sent a stark warning to clients that an era of cheap borrowing ends. Investors will find it increasingly difficult to turn a profit and amid extremely challenging macroeconomic environments, the Financial Times first reported the content of the letter. And investors should not assume they have seen everything just because they've navigated through previous bouts of financial distress like the 2008 subprime mortgage crisis. 2022 has already been a dismal year for the markets, with global equities seeing a loss of $28 trillion, according to data compiled by Bloomberg. Elliott largely blamed central banks for the worsening financial picture and added that most have been dishonest towards the true culprit of record high inflation and have instead attributed price pressures to supply chain disruptions as opposed to loose monetary policy. The looming bout of hyperinflation could lead to global societal collapse and civil or international strife, the letter said. Elliott also added that markets still have room to sink lower and find a bottom, while frightening and seriously negative possibilities remain on the horizon. So very much a stark letter, and if you actually type in hedge fund news, this is all you're going to see is this letter from Elliott Management. So what does this mean? Just to quickly recap and get this segment of the video over with. I'm sure some of you guys are ready to get into the hardcore data, hardcore facts behind AMC stock on the day, and that's all fine. But what this means is if shit continues to hit the fan, hedge funds are going to be in a worse off position to remain in short positions if AMC does see a positive rebound in the stock price. And there's been a lot of people talking about potentially AMC going through another short squeeze kind of rally. Same thing with GME. And you've actually seen a lot of positioning from some hedge funds actually trying to trade this. As you can see right here with AMC stock, we have seen one order so far on the day as far as unusual and interesting option flow sentiment, and it's for December 16th. It's a $10 call. 810 options purchased, $26 a piece, worth $21,000. Now, this is interesting because it's very far out the money. It's a 100% move from here to break even on this option. It's not for a huge amount, but it's definitely a very, very risky option, something that a lot of hedge funds would never even think about touching. So I think that's pretty interesting. I think it potentially sets us up for a good reaction on earnings. We've seen the positive order value getting more and more positive over the last week. And more specifically, we have seen 41 orders totaling $1.58 million, positive order value of 62% over the past week. So I do think that is a good sign. As far as the short interest as well, the live short interest actually has us going up today. So more shares are being sold short, and now we're sitting at 20.14% short interest of free float, 104 million shares that are sold short, 22.65% cost bar max, and cost bar minimum of 0.35%. Now, if we go ahead and take a look at what is happening in the marketplace today, the S&P 500 down about 0.5%. Yesterday was terrible. So over the past 2 days, we've dropped 3%. The NASDAQ down, I believe it's close to what is it? 1% today. We dropped 3.5% yesterday. So you're down 4.5% in 2 days. It's been a very bad move down, and the bond market as well as the dollar is not supporting any kind of rally here because the Fed was very, very hawkish yesterday. In his comments, in his press conference, he was very hawkish. In the statement, it sounded dovish. So the markets were very, very confused about what was actually the real message the markets should have got out of yesterday. But nonetheless, bond yields are up today. Bond prices are down. That is the correlation. TLT is down about 0.33%, and the dollar is up a whopping 0.78%, approaching new highs of 2022. And when the dollar goes up, that is very, very bad for international companies. That's why you'll hear on earnings calls, essentially this phrase called constant currency. That means if the currency would have stayed at a constant rate, you would have been up or down, call it whatever percentage it is, right? Some companies are coming out and saying, you know, on a constant currency basis, like Apple, they came out and said on a constant currency basis, we would have actually grew sales around 9% year over year. But given the lack of a constant currency, we only grew sales at, I believe it was 3.5%, 4%. So it's taking a hit out of fundamental earnings from companies, and that's a bad, bad thing. And it's also hurting emerging markets as well, where some companies based in America do business. So guys, that is going to be all for this video. Leave your comments, questions, or concerns down below in the comment section. Hit that like button, subscribe to the channel for Ling Ling being crazy little Ling Ling over here. Say I love you. Say hi, guys.
Hi, guys.
Say bye, guys.
Bye, guys.
Wave. Wave right there in the camera. Wave. Bye. Alright, guys. So, thank you guys for watching. Like I said, if you guys want to come trade with me live in real time, link down below in the description of this video. Not sure if I said that or not because Ling Ling always coming here to disrupt the party. But nonetheless, or maybe she is the party. I don't know. That is it. You guys enjoy the rest of your day. I will see you in the next one.